It's the Black Real Estate Dialogue. Tune in. Tune in. Tune in. Tune in.
All right, everyone. Welcome to another episode of the Black Real Estate Dialogue podcast. Very excited about this episode. Before we get into the episode, take a moment, pause this podcast, and leave us a 5-star rating and review wherever you are listening to this. It helps us go up in the rankings, reach more people, and you also get a shout out. So I look forward to hearing from you. Very excited about this guest tonight. I have Vernon Beckford from New York City. Vernon, thank you so much for taking the time to join us tonight.
Absolutely. Thanks for having me. Excited to be here.
My pleasure. My pleasure. So Vernon, introduce yourself to the people. Let them know who you are and what you do.
Sure. So my name is Vernon Beckford, and I'm the CEO of a company called Diversified Lending Solutions, which is a debt capital markets advisor, which helps real estate operators that are looking to scale their operations obtain debt financing. So for the average operator who's clawing their way through trying to go from step A to B to C, we use debt and other products to help facilitate their growth.
Love it. Love it. So Vernon, let's jump right into it. How did you get into the real estate industry? At what point were you like, you know what, I want to do something in this field? Talk to us about that.
Sure. So I wish I could say it was some grand plan, mastermind, but it really wasn't. I was at Columbia studying political science. I knew I wanted to go into finance, and I got an internship at Credit Suisse in investment banking to figure out how companies finance themselves. I was always intrigued by that. And I stumbled in a rotation in the real estate department, and I learned this crazy concept called securitization, and started to realize that real estate was a lot more complicated than I'd ever thought. I'd always just been kind of like a lot of people played Monopoly or things like that, but understanding all of the mechanics behind how the real estate industry worked really fascinated me, and that was the beginning of my career. So I ended up working full time with Credit Suisse, and then it all jumped off from there. And now we're 15 years later, a little bit more actually, but 15 years later on a really exciting journey.
Awesome. Awesome. Talk to us about Diversified Lending Solutions. I know you started, I believe, in 2020. I'm very interested in what led to starting the company, and also like what led to the leap from your previous job to just, saying, you know what, I'm gonna go out on my own and help out people in this way.
Sure. So great question. So prior to 2020, I was very fortunate that I got to work for some really large organizations that were involved in the financings of other really large organizations. And so the good thing about that is that you learn a lot. You're almost drinking from a fire hose, because there's so many factors involved, and you really do become a subject matter expert. But one of the things that always frustrated me very early on in my career was that once you walked out of the headquarters of your office and you were sitting with your friends and trying to figure out, okay, how do we build our little mini empire? Because we see all these other successful operators. How do you get there? You have to start somewhere. It always was a challenge of arranging the financing, right? And we kind of walked in naively very early on saying, hey, we're smart. We went to good schools. We can go out and we can do deals on our own, and banks and other financial institutions will race to do business with us. And of course, that was not the case. And so we had to get creative, and we tried, had to find ways, a lot of times bootstrap deals or do very small deals and claw your way up. And all through that process, while both my partner and I were working for these larger companies, we said, this is really unfortunate, right? How do you bridge the gap between becoming that super successful company and the one that's starting out today, or is kind of rounded first base but hasn't gotten there yet? And you really don't see a lot of focus on that, at least I don't, in the market. It's either we're going to serve the companies once you figured it all out, basically, and then everything else becomes a lot more choppy and vague and hard to navigate from there. So the people who figure it out do incredibly well, and everyone else is kind of looking up saying, I wish I knew how to get there. So fast forward to the pandemic, and guess what? Even people that were reasonably far on their journeys said to themselves, hey, what the heck is going on? The market is changing every day. The market is unpredictable in a way that no one has been able to really use as a base case. So a lot of folks that took it for granted in a good market with low interest rates, they could just go out and get a loan and buy their property, were suddenly scrambled. And so we saw an opportunity that said, listen, there is a whole cohort of folks that can't just pick up, call their banker who they've been working with the last 10 years, who has solutions on deck for them. And they're panicking and they don't really know what to do and what to think about. And fortunately, we have relationships and we have experience and we have the visibility to what's happening on a day-to-day basis in the markets, that we could provide relief to that business that is not necessarily as big of a focus to the larger advisors in the market. And that was really the inception of Diversified Lending Solutions.
Got it. So it just sounded like, what was happening in the world, some solutions that you had in mind, and just this previous desire you had to get into. But it just seems like a lot of things happen at the same time. And, this was the right time to make the leap.
It dovetailed very well. I again wish that it was a part of some master plan. But it just so happened that we were far enough along in our journey and our understanding, and the market conditions were accommodative enough that those two things aligned. And we said, wow, now we can actually take everything that we have as far as resources and accumulated both on the institutional side, but also having now been small investors ourselves. Like through that whole process, we were either doing our own deals on the side while we had jobs or investing in deals on the side. So we got to see those two worlds that were like parallel tracks, but they hardly ever connect, and say, listen, we can find a way to bridge that a little bit closer and help people, build wealth in the process.
Definitely. That's so interesting that you mentioned, like, at work, right? Like seeing what it looks like on a super big scale, right? With these huge deals, and then also doing your own thing on the side as well. And I'm sure like what you learned at work helped with those deals outside. Do you mind talking to us a bit more about what some of the things you did outside and on the side prior to the inception of the company, and how that helped you learn?
Sure. So one of the biggest differences I'll say in the learning is that there's an academic learning that comes from school. There's an experiential learning that comes from working at a large institution. Okay, this is how things are done. This is what professionalism looks like. And then when you're on the ground doing it yourself, there's that entrepreneurial component that you're learning, and all those little pieces to the puzzle that maybe got taken care of before you even had to think of them when you were working at a large company. So for instance, my partner launched what I would call at the time, it was a short-term rental business. He was very early on the Airbnb kind of trade. And at the time, people thought he was a little bit zany, and he'd go out and he was buying SFRs and townhomes and he was renting them out. There was no kind of SFR, fix and flip, Airbnb financing at that time. He was literally finding ways to use hard money and so on and so forth. And the amount of war stories that accumulated over that time in terms of, horror situations with tenants and how you pre-screen a tenant properly and how you actually manage a renovation project. Things that if you were working at a large company, you just kind of phone in and they just get done. In this case, the good thing is that we both had to involve ourselves in every aspect at various points of a project, not because we necessarily even wanted to, but because that was just the necessity of the deal itself. So in my case, my preference, he was extremely hands-on. I was more of a passive investor, but in slightly larger projects. Mm-hmm. So in my case, when you're screening, let's say a multifamily operator, and you're saying, hey, I have a value add project and I'm raising money. In my case, I found myself being kind of the spokesperson of the investment group in many cases, because folks were coming to deals with no real estate experience. Said, oh, it's housing, it makes sense, I like it, it's in a market I want to invest in. And then I kind of raised my hand and said, wait, and start asking questions that, I'm sure the operator wasn't always thrilled that I was a loud voice in the room. But in that respect, it educated the other investors. And in the process, I still got the opportunity to learn, because it was almost like I was being a portfolio manager of my own book, and frankly had the opportunity to make some decisions that I would have to go to a credit committee or someone else to sign off on. In this case, I could use the discretion to say, I believe in this operator. I believe in their business plan. I think there are tweaks to their business plan that's required, and I'm going to consult them on that. And if I feel comfortable, I'm going to make the call, and the buck stops with me. And that's a very different type of process than if you're sitting in a room with senior leadership and everyone just has to buy in and you're another check mark on that list. You know, the accountability is there, but it depending on what the seat is, when you're putting your direct dollar into that deal, not the company's dollar, but your dollar, it raises the stakes dramatically.
Definitely. So Diversified Lending Solutions, can you let the audience know like what your company does, your business model, all that good stuff?
Sure. So the simplest way to put it is, if let's say you're an operator and you're looking to either buy or refinance a property, you're going to need real estate debt. Most cases, you're not going to buy the property in cash. So depending on the circumstances of what your deal is, it may be a new construction project where you're building something from scratch. It could be an adaptive reuse where you're changing from what it is today to something tomorrow. It could be a value add where you're making some improvements, or it could be an asset that is stable, cash flowing, but you just want to recapitalize it. You would come to us, and we would sit through your business plan and figure out the right lending profile and the right lender to fund that deal. And in that process, what we would work on is figuring out, what is it that you really need for your business? Is it that you need a longer term loan? Is it that you're trying to have the lowest interest rate? Do you need a lot of leverage? Do you need flexible prepayment? There's a whole laundry list of things, almost a menu of sorts that you could solve for to say, well, based off what will help you grow your business and generate the highest rate of return on this investment, these are the types of lending products that you'll look into, and will identify the right funding source. One of the biggest pieces of the puzzle that gets missed is that in many cases, small operators do it all themselves. They're the person finding the property, they're dealing with brokers, they're putting in offers, they're in some cases doing renovations themselves, they're calling up lenders, they're borderline their own attorney, reviewing the legal docs. And so there are a lot of places where things can fall between the cracks. And that operator in most instances is not sitting there every day talking to banks, insurance companies, endowments, pension funds, hard money lenders to understand how the changing winds are affecting who will lend what, when, and how. And so in many cases, they're just going in shooting blind, or just hoping because, hey, it's a strong market, I'm going to call the lender I worked with last time and they're going to want to do this deal, because why wouldn't they? I'm an amazing operator. I have amazing properties. And that works until it doesn't. And then when it doesn't, it starts to elicit panic and people have to scramble. So the whole goal is to prevent that and to actually help folks save themselves the heartache, the pain, and actually money as well, because it's a lot of costly mistakes you can make signing up the wrong loan by working with an advisor. The last thing I'll say on that is that what we found is that what you don't see as much of a problem for large organizations is understanding what lenders expect and knowing how to address their objections up front. And what I find is that small to mid-sized operators in many cases kind of operate in their own universe. And so it's like, okay, this is the deal. Here it goes. And it's not framed in a way that someone would actually digest it and want to fund it. And so we understand, because we've been lenders in the past and we've worked on Wall Street, if I'm someone sitting in my desk and I get 20 financing requests that day, am I going to stop and read yours and say, this is something I should prioritize because it looks professional, because it's well thought out, the request is reasonable, it's rationed? Or am I going to be the person say, I'm going to put that to the bottom of my list and get through everything else. And if I have some time, maybe I'll peruse it because the ask doesn't make sense. It doesn't answer the questions that I have. It's in the wrong market. The operator doesn't seem to really have any differentiated experience. So a big part of what we do on a day-to-day basis is help take that diamond, right, that operator, and polish it in a way that whatever is then the final product that that goes in front of a lender is one that is well received.
Got it. Good breakdown. So do you mostly work with like large operators, or what I mean by that is like, large multi-units, or do you work with, I guess, is there a criteria or a certain type of client that you ideally work with?
Yeah, it's a great question. So we operate on what we'd like to think of as a hybrid model. So the average client that we serve requires financing in the $5 to $50 million range, right? And that in the world of real estate is still fairly small to mid-sized deals. But we realize, listen, there are some people that are well along their way, but they're not at the $5 million deal yet. And we need to help bridge that gap. So what we do is in-house, we have the capability to fund small balance deals. So long as they're either single family rentals, fix and flip, small multifamily or mixed use properties. And those are deals that we will, on a case-by-case basis, actually fund ourselves and use that, frankly, as a bridge for the operator that's still not at the point where they get 5 to 50, but want to get there next year. This is a great way to bridge that gap. One of the things I was really excited about last year that we accomplished was we had a client who at the time had very quickly accumulated a portfolio of 500 multifamily units, started from zero and got to 500 in less than 2 years. So they were already racing. They found a property and they were looking to buy that was another 460 units. So to any lender, the first thing is, can they take this down? This is too much, right? And so we really helped them frame the narrative and position them in a way that not only did they get a loan, but they got a great loan. It ended up being a $40 million project, which I think overnight transformed that operator's business to the point where they went from 500 to 1,000 doors under management, and they've been in business for less than 3 years. To me, that's phenomenal. And it's an African-American sister. To see her doing that, wow, and for us to be involved in that, that's the kind of electrifying work that kind of gets us up in the morning. And we want everyone to be in a position where they get to be that operator. So if they're in year 1 or 2 before the big pop, well, we want to help you get to the first 100 units so that 6 to 12 months from now, you're doing 100 and 200 unit properties. And then a year from there, we're laughing about how small those deals were because now you're doing 250 or 500 unit properties.
Got it. That's amazing. So it sounds like there's a couple of aspects. So on one hand, so I think 5 to 50 million, you're basically preparing the operators to speak to lenders to figure out the right type of financing, so they'll get rejected less and they'll be ready to make a strong pitch to a lender. Is that right?
Exactly. And taking it even farther, we will do the pitch and we will step in the shoes of the borrower. Yeah. So for all intents and purposes, the lender is speaking to us.
Got it. And I like that because it takes the pressure off of the operator. Because it's like, let's say it's me, right? And, I'm really good at finding the deal, or I'm really good at raising the money from investors, but I don't have the skill to talk to the lender. I don't know how to break it down, how to present everything. I think it's great that your company will come and do it, even more so than just like consulting, like you're actually doing the whole process, which I think is awesome.
Exactly. And that's when I talk about the dual, framing of a deal, right? It sounds so simple. Everyone's, framing a deal. But when you're actually in a position where you kind of like, if you watch those like 80s movie where there's the corporate boardroom and it's the long desk and you're on one end and someone's on the other, that minute when you're sitting and doing the pitch and you're walking through, if you can't speak the language of whoever you're talking to, it's not going to resonate. And most operators don't speak lender talk, right? Because that's not what they're good at. So yes, the goal is to actually leverage us to be that part of your team, such that by the end of the deal, you almost felt like we worked with your company. There was no distinction between your company and ours. And that's how we want you to feel.
Are you looking for a community of like-minded individuals and access to experts in real estate?
Yeah.
Are you interested in real estate but need more support and guidance?
You know who it is?
The Black Real Estate Dialogue presents the Real Estate Investing Community. No matter how much or how little real estate experience you have, we've created a community for you because your perspective is important. All right, tell me, where's the number one place where you can do Q&A with experienced guest speakers 2 times per month? How about unlimited access to past guest speakers' recordings? What about a private Slack channel to engage in daily discussion with everybody in the community to share resources and support each other? Head on over to blackrealestatedialogue.com. That's blackrealestatedialogue.com. It's the real estate investing community presented by the Black Real Estate Dialogue. Come join us today.
Love it. How do you find clients?
It's a multi-step process.
Yeah.
There's not just one answer. So one, there's just the network of personal relationships, which is always something that you have to build over time. 2, obviously in a digital world, we do digital outreach. And so folks see me from time to time on LinkedIn and my partner as well. And then word of mouth is hugely important in this business. Once someone has a positive experience, they tend to want to repeat it and share that with others. So it's a lot of traditional businesses in that respect. Relationships matter a lot.
Definitely. And the other aspect that I really like about the business is you're enabling yourself to capture more of the market, because you mentioned if someone has a single family or 3 or 4 unit, whatever it is, on a much smaller scale, that y'all will actually fund that deal yourself. Can you talk a bit more about that? And is that something that was part of it from the beginning, or was it added on, over like the last year or so?
Yeah, so that's a great question. So originally, when we started the business, we were actually a little bit of the victim of the same problem that we're talking about. Our original goal, frankly, was to raise a large pool of capital that we could use to fund directly into communities that we felt strongly about. And especially in the wake of all of the social unrest that's been going on in this country, we felt like it was a really interesting opportunity to raise capital around that and really kind of take control of our own narrative, our own communities. And the only way to do that is if we're funding each other, right? When COVID happened, again, everything changed. And so that paradigm shifted so much that, frankly, for us, we said, okay, that should be a part of our business. But given the volatility in the market, let's step into the market as an advisor, frankly. Let's help people navigate all of this confusion, and let's scale into the capital over time. And that's basically where we got the hybrid model. And that's what brought us to today.
Got it. Love it. So I know you have, we spoke off camera through messages and stuff. And I know there are a couple of things that you shared with me that I want to discuss some more. So one of them is creating a powerful and persuasive narrative to obtain funding. A lot of times people think, I just signed this application and send it to the bank, but you get to a point when you grow and that's not enough. So, and many people may not have thought about that, but once you get bigger, like, it's just different. So can you talk more about that?
Sure. So the easiest way for me to explain it is I'm a diehard comic book fan. And at the end of the day, the comic book is all about the story, right? And as much as finance is about numbers, it's also about the story. It's about the narrative. It's about, why should someone care enough to stop what they're doing and focus on you? And unlike the residential mortgage market, this isn't a commoditized, product where you could replace one house for the next house. It's effectively, a 3-bed, 2-bath is a 3-bed, 2-bath. In this case, it's really about the business plan. Who are you? What do you plan to do? And what facts can you share with me to convince me that plan makes sense? And so what I find is that people fall in love with their own transactions. They decide, okay, the price is right. And they assume other people will have kind of just through osmosis understand why the deal was so attractive, and then just drop it on somebody's desk and expect them to race to want to fund them. That's naive, right? That doesn't really make a lot of sense in today's world. So from our vantage point, it's two narratives. It's a narrative around the sponsor personally. What have you done? What makes you qualified? And if you don't have a ton of track record, what can we do to augment what you do have to make you look as qualified as you probably are? And then on the deal side, what are the factors that make this an attractive transaction? Are you buying it at an attractive price? Are the cash flows that you're going to be generating relative to the purchase price very attractive? Are you in a position where you think that you're in a rapidly appreciating market? There are all these factors, and those are the good. And then there are all these negative factors that, again, a lot of people just kind of glaze over and don't address when they walk someone into a deal. The best operators, in my opinion, are the ones that aren't trying to sell me or sell an investor, but can very clearly explain what the risks of their own deal are and how they manage them. Because to me, that tells me that you're thoughtful, you're acknowledging of the fact that things can go wrong, and you're taking steps to prepare for how to manage those, as opposed to the rosy story approach, which is, hey, it's a great deal. Okay, maybe good luck, but that's not gonna, that's certainly not gonna impress folks. And I'll say that that's especially the case for folks like us, folks of color. I'll say folks from all underrepresented groups. For women, you can't underestimate, and it's not always the case, but you can't underestimate the fact that bias plays a role in people's decision making. Most people like to work with people that look like them. So I find unfortunately, a lot of folks from underrepresented groups don't do themselves any favors because they don't provide all of the ammunition that would make someone say, listen, I have to do this deal with them. There's no reason for me to explain why I would.
Love it. Love it. Love it. And I'd love to talk a bit more about at the smaller investor side and just some of those deals that you funded. You mind if we talk about some of those and
Sure.
Perhaps how some of those were structured? I was looking on the website and I know there are a couple of different options, in the menu. So
Sure.
we could talk about that. I'm sure we have some listeners who are on the smaller side who maybe they need funding for a deal. So I think it's a good time.
Absolutely. So really excited. One of the most recent deals we funded was an Airbnb loan. And if you remember, I told you my partner was early into the Airbnb game. So that's a business we like, and that's a business we understand. And so there was a borrower who, successful real estate operator, had actually built a family home in Hilton Head, South Carolina, beautiful beachfront property, and had started to rent it out as an Airbnb. That evolved as an event planning space, and he generated a nice little side business out of that property. And so in an effort to raise liquidity for his other real estate projects, he was looking for a long-term loan on this property, and we financed him a 10-year loan. And he at the time had very little debt on him. And so we were happy to accommodate his loan request, and we funded him 70% loan to value loan. And that in my mind was a win-win for a lot of reasons. One, it's always cool when you can help someone grow their own business. So the liquidity that we funded on this deal actually helped him on his next project. And I think from his vantage point, he was so convinced that he said, listen, I have an Airbnb property. I call up my bank. I can't get anything from these guys. They don't want to do it. I called up the hard money guy. He's like 8, 9, 10%. He was really happy that he found an alternative that was affordable, that was reasonable, and he could work with people who he knew respected him and wanted to see him win. And we wanted to see him win, and we got that deal done. So that's just one example. That was an $800,000 loan. And that was, a relatively small deal, but really impactful in all the ways that it got done. So it's not uncommon to see a property like that, or a $500,000 townhouse or brownstone in an urban market. Let's say a Jersey City or a Baltimore or a Charlotte or Atlanta, where you have that operator, he or she is climbing up bit by bit, and they really don't have a go-to. And traditionally, the go-to would either be a hard money lender that would be really expensive, maybe their local bank, but in many cases not, or some of the private lenders who have emerged over the last couple of years. But the thing with the private lenders that people don't fully appreciate is because they don't hold their loans on balance sheet, and they're ultimately securitizing their loans, meaning they're pooling them and selling them as bonds. The pricing of their loans varies dramatically from one week to the next. And anybody who's in the business today can appreciate how much rates have jumped up on that product. So to be able to speak to someone that you can actually get some transparency from goes a long way when those are really your only options in the market today.
Definitely. And when you're looking at these smaller deals and looking to fund them, what's your criteria? Like, what are you looking for? Like, what does someone need to come to your company with to be viable and to give them a good opportunity to get some funding?
Sure, great question. So we want to see that they've done at least 2 deals in the last 12 months, preferably more, but at least 2. We want to see that they've actually, they want to see how they've executed on their business plan for those 2 properties. We want to see their credit. Is their credit score a reflection that they actually pay their debts, or is it, scratched up? So generally, we want to see a credit score at least 620 or above. We typically will want them to be financing at least $75K and up per deal. Anything smaller than that is tough. We'll look into whether they had any prior bankruptcy or foreclosure history. Generally, there's not, but if there is, that's something we want to get in front of early on. And we really want to see, frankly, if they have enough upfront liquidity to cover usually at least 6 months, but 6 months to 12 months of debt service. If they can do all of those things and they meet the criteria for a single family rental, for a fix and flip, for an Airbnb, they're a great candidate for a loan.
Definitely. Do you have a favorite between those 3?
That's a good question. So I really think, so here's the thing, and there's no short answer to that.
Yeah.
I really like the Airbnb business model. Clearly, that is a new segment that has grown tremendously. There's also a volatility in that business model, right? If you look at what happened in COVID, Airbnb rates fell through the basement, but then they ratcheted back up. So, my partner will tell you he had a few gray hairs that came of the cycle because there was so much volatility in that. That being said, you can generate, when times are good, such a premium to a monthly rent that your cash yields are really exciting. As an alternative for single family rental, though, more stability. You generally enter into a 1-year lease. You don't get the diversification of multifamily because you're usually, levered to one tenant, but you also don't get the fluctuations that you get in Airbnb in terms of demand. And there's so much unmet rental demand in the market that you can very comfortably enter into that space and know, that demand is there and it will be for the short term. The fix and flip space I like, but it's been very challenging given how much single family home prices have run up over the last 2 years. So with COVID, obviously there's been a big push for single family housing. Makes it hard to get into fix and flip projects at a cheap enough basis, with the added fact that construction costs have gone up so substantially over the last year, it's harder to make that work at the profit margins that are really attractive. So if I had to rank, I'd probably rank fix and flip last. I would say SFR, I would say it would be my de facto, but Airbnb number 2 with an asterisk.
Definitely. And you started a business during a very interesting time in history, a tumultuous time. We could find a ton of words to describe it. What are some of the challenging moments you've had over the past couple of years in the business?
Oh, there's so many. That's I could be here all day with that. What are the biggest challenges? Well, number one, I'll say that as an advisor, your goal is to build trust with your clients and trust that they can rely upon you to deliver a solution. And that trust shouldn't be taken lightly. And trust takes time to build. So for us in building that business and specifically focusing on smaller enterprises, in many cases that were suspicious, skeptical, not only skeptical, suspicious, but very conscious of how much they could spend, even if they saw value in a service, really requires you to spend a lot of time walking through the value proposition and learning and listening as to where people's pain points are so that you can really address them. Mm-hmm. So something that I've been guilty of, and I think other people may be as well, is that when you come from working in large institutions and you come from working, going to great schools and all of this, you tend to believe that you have a great understanding of how things work. And I certainly have thought, okay, this is how things work. And then when you talk to operators, you realize it's not about me and what I think works and what doesn't work. What is their pain point and where do they really have a need? And then let me address that need. And so it was a growth process, a learning process, an evolution of us in terms of the business model and being fluid enough that we were responding to what people were telling us and not trying to dictate to the market what they should and should not value. So I would say that was a big point. I think as far as patience goes, like I said, we would have loved to come out with 3 verticals. We'd love to be in the advisory business. We'd love to have raised $1 billion. We'd love to, do, something else. And being ambitious and having goals, you realize there's steps along the way to get you to where you need to be. So the process of building infrastructure is not always fun. It's not always glamorous, but it brick by brick gets you to a point where you can build something sustainable and scalable. And we've been very diligent in doing that. But there are times where you get impatient with yourself because you want to build the Ferrari overnight. And it most cases doesn't happen overnight. So I would say those are the two of many of the frustrations and learnings that we've had to manage.
Definitely. And when it comes to funding and really putting your business in position to get funding for your real estate deal and project, what are a couple quick tips that you would give to someone in addition to giving you a call?
Yeah, sure. No, absolutely. I would say if anyone looks at our website and they could check us out, dlsloans.com. One of the things we really emphasize is this concept of objection smoothing. And when I say objection smoothing, I say start from the position of why someone would say no to your deal. Don't start from the position of assuming that they will like it as much as you. Start from the position of why someone wouldn't like it. And assume that person is like a really cranky, codgety, grumpy person that doesn't just assume that things go well. And when you look at your deal through that lens, you may even identify risks that you really didn't give as much weight to. But when you go through that risk and you think through, okay, this is how I can manage it. And the way to manage isn't that things just get better over time. It's, okay, for instance, if I'm buying a property and it's 70% occupied, and I'm saying it's going to get to 90% occupied, well, why? How? Why should I believe you're going to be able to do that? oh, well, the market is 90, so I'm gonna lease it up to market. Well, that's not satisfactory, because if that was the case, that whoever was selling it to you would in theory have gotten it to 92. So peel back the onion a little bit. Tell the person, showcase to the person why and how they shouldn't be as concerned with the issue, and that it's something you've already thought. And I would say if you can do that well, it sounds very simple, but many people can't do that. And if you can do that well, you're already ahead of the game significantly. The other thing I would do is a lot of operators take a shotgun approach when it comes to their lenders. And the reason is they don't really give a ton of thought all the time as to who the best lender is at that moment in time. And that invariably wastes a lot of time, which is something that many people can't afford to waste, because they have a short fuse on their deals. So even if it's just giving a call to someone you trust who's in the capital markets, and that could be us, that could be someone else, get a little bit of a sense of where the market is, get a little bit of a sense of what's happening in the market, so that you're not in a position where you're chasing your tail, because you don't want to find yourself in a position where you don't get the answer you need. And now you don't know how many times I get a call that says, hey, I need a loan. I said, okay, what's your timeline? Oh, I have a week to close. And he said, well, how did we get here? A week is not sufficient time. So a lot of times people back themselves into a corner that way. And unfortunately, a lot of deals don't happen because the steps weren't taken up front. So I would say at the very least, if folks do those two things, they're potentially saving themselves a lot of heartache and loss of money, frankly.
Definitely. So when you think about the future, it's been a couple of years in, a lot of lessons learned, and the business has grown in many ways. What does the future look like for Diverse Lending Solutions?
Yeah, so that's an excellent question. So for us, we want to continue our mandate of helping operators achieve exponential growth. So that's number one. Number two is what we found is that for many people who need debt, they say, listen, we understand that we need debt, but frankly, until we get more access to equity, we're simply not going to grow as fast as we'd like to. And we want to be a part of that process to help folks actually be able to raise more equity. So we've been working programmatically with large institutional investors who have expressed a strong desire to fund qualified operators of color and help bridge the gap in actually helping folks that have traditionally either resorted to friends and family capital or maybe one or two investors, really taking that next leap. And as opposed to having to cobble together a couple 100,000 or $500,000, be in a position where they have a partner that can write a 5, 10, 15, $20 million equity check. And if you have that, the ability to close on deals exponentially larger changes overnight. So that's something we do every day. And that's probably the hardest part of our business right now, because you'd be surprised, or maybe not, about how many large institutions vocally state that they're really committed to more equitable investing. And then once you peel back the layers, you're saying, well, okay, how much is really getting done in the space? Because I'm certainly not hearing a new watershed of Black operators saying we suddenly have capital. So it tends to be a case of the haves and the have-nots. Those who already figured out the cheat codes and have raised a lot of money are easy operators to give more money to. Those that haven't are very hard to or struggle to get the capital. So we really want to focus on fixing that. And that's not going to be a quick fix. So when you say, what's the plan for the next couple of years? That's going to be a multi-year plan. And ultimately for us, stage 3 is then being able to position ourselves where we've done enough in the advisory space where we can credibly raise more capital that we manage ourselves, and have the discretion to invest in the markets that we feel very strong about, where we have deep relationships in, and we can, in some respect, skip the middleman, for lack of a better term, and be in a position where we have the ability to invest in the operators that we know are qualified and deserving of capital. So that's really the three legs, that we're standing on now, and we're excited about it because 20 years ago or 15 years ago, the conversation was very similar, but I do think we've come a long way in that there have been success stories that people can really lean in and be proud of. People are figuring it out and they're sharing information in new ways with technology. People are realizing that in order for the African-American community to grow, we really need to pool our resources and take it seriously and work together. And there's more pressure on the large corporations, largely because pension funds are funded in large part by workers from our communities to put money back into those neighborhoods. So I'm excited about it. It is not an easy fight. But I'm here for it, and I think that we're making progress.
Definitely. And one thing you mentioned is that there have been large institutions that express desire to invest in more operators who look like us. Do you think the fact that there's still that gap, do you think it's because they don't know where to find them? Like, what do you think it is? Do you think there's what do you think it is? So
I was talking to someone about this the other day, and I equate it to when I went to business school.
Mm-hmm.
So I remember, so I went to Harvard Business School. Harvard Business School at the time was about 8% African American, give or take. And each section is a section of 90 people, and I think I was the only African American male in my section, which frustrated me. And I remember at one time there was these meet and greets with the dean where you got to share your gripes. And I said, why am I the only African American male in my section? And effectively, I don't want to take what he said out of context, but effectively what he said was, we want there to be more, but we don't know where to find you, basically. And I find that that's a common response that institutions will say. They'll either say they can't find us, or there's such a significant learning curve, quote unquote, that if they do find us, we're not really ready for the pro leagues, that kind of thing. And so part of what, my partner and I are here for is to, all right, if that's the case, then prove that, because we're going to put qualified operators in front of you. And we're going to bring more visibility to the folks that are already successful in this field. So if they're here and they're qualified and they have good deal flow, then what now? And I feel like we need to keep applying pressure to demonstrate that narrative is misleading. That there are many qualified operators that have access to quality deals, and that it's not enough to simply say, we don't know where to find them. If you don't know where to find them, then you need to hire folks that do, or you need to work with advisors that have the relationships, and take that next step to demonstrate that it's a priority to you. Otherwise, it's just empty words, frankly.
Definitely. Well, I believe your position, your company is in great position to do that, to be that company that helps to make that connection. So love the passion.
Absolutely.
Man, this has been a great interview. Great interview. I'm just thinking about the beginning. You mentioned 15 years or so going to school in the professional world, and everything you learned really led up to the point of being able to start your company with all the knowledge that you had, things you're doing on the side. And it's really just the beginning. And so I know the listeners will be pumped up to hear this episode and just hear more about your journey. And I can't wait to hear, hopefully over the years, about all the money you raise, all the people you help, and how much more there is to go. So, really appreciate you taking the time to come on the show tonight, Vernon.
Absolutely. Glad to be here. Super enthusiastic. I hope your listeners are a little bit pumped. And, listen, this is a marathon. It's not a sprint. They're going to get there. We're making progress. Keep your eye on the prize. And if we can collaborate and we work together and we share information like you do through this show, we'll make some real progress.
Definitely. Vernon, let the people know where they can find you, where they can reach out to you, where they can keep up with what Diverse Lending Solutions has going on.
Absolutely. So I'm on LinkedIn all the time. So look me up, Vernon Beckford. You can also look up my partner, Eric Andrew. If you want more information about our company, you can go to dlsloans.com. Our contact information is on the website as well. Feel free to reach out to us. And those are the easiest ways to reach us. And if you simply want to have a conversation, you want to pick our brain, we're deal junkies. We love talking real estate. So don't feel, don't hesitate to reach out to us. We're happy to talk to you.
Love it. Appreciate you again, Vernon. I know folks are going to get a whole lot of game out of this. And I appreciate everyone for listening to another episode of the Black Real Estate Dialogue podcast. Please be sure to leave us a 5-star rating and review. It helps us a whole lot. Thank you all so much. I look forward to hearing from you all soon.
Hi everyone, Sam here from the Black Real Estate Dialogue. Make sure to hit that notification bell and that subscribe button and to visit us at blackrealestatedialogue.com.